Hi, everybody. Thanks for tuning in. Robin Spears here, and there's a really hot topic that I want to discuss, or that's really taken up a lot of, scaring a lot of people, taking up a lot of time discussing, and I thought this would be an opportunity to bring a professional in and dispel some of the myths or even offer some insight. So, welcome, Teri from Pi Business Solutions.
Thanks.
I'm going to let Teri tell you a little bit about what he does and how he can offer some insight into some of these proposed tax changes that are scaring the heck out of a lot of people. So, Teri, what can you tell our viewers about you and what you do?
Well, basically, I'm a tax accountant. I've been working in self-employed for the last 10 years and working in the business for 15, 16 years in total. I specialize in corporate small business tax specifically, and I'd say I am expert with the investment side of corporate income tax too. So these are areas that are directly affected by these tax changes, and I understand them thoroughly. And I wanted to see if we can clear up some of the smoke that's coming from both sides, so that people can understand what's going on.
Yeah. So what are the current proposed tax changes that's getting everybody all riled up?
Yeah, so there's four. There's three big ones, but one is sort of a two-parter. So the first one, and this is where we're hearing a lot of ideas about loopholes, from the Liberals. But one of them is a loophole, like no question. Through a very complicated mechanism, we can convert one type of income to another. For a person taking money from a corporation, and it's convoluted, it's intentional, and it's a loophole, and it doesn't belong. And closing that shouldn't hurt anybody. But by the same token, I should be clear that the existing laws prevent that anyways, at least under general anti-avoidance. But closing a loophole like that doesn't hurt anyone. The problem is the other three changes. The second one that we hear a lot about is this concept of dividend sprinkling, where let's say Robin and I are married. Let's say we're not, but let's say we are for the sake of this argument. And Robin runs the corporation. I stay home. I take care of the kids. I maybe help out a little bit on the side. Oftentimes, the shareholders would both own shares of the corporation, and then him and I both. And I would receive dividends through the corporation, and he might receive dividends through the corporation or take a wage. The idea is that because I'm not active in Robin's business, like I'm not a realtor, for example, that I shouldn't be able to receive dividends from our business. There's rules already that prevent him from paying me a wage in that circumstance, except beyond what I would earn. But now they're talking about taxing dividends the same way, which it's strange to me because it flies in the face of what a dividend actually is. And but they're talking about changing that so that he either won't be able to make me that dividend, or more likely they'll just tax it so bad that he won't want to. So that's one of the changes. And then sort of like 2A with that is, in the same corporate scenario, if we sell our business together, we're each exempt on more than $800,000 in capital gains arising from the sale of that business. But the new rules propose to take that away from non-active partners. So if Robin is my spouse and that happens, he would be exempt on the first $800,000, but I wouldn't be, and that's a big one, because that can cost $250,000 in tax, more if you live in the wrong province and have really high income. Yeah. And nobody's talking about that one, which is weird, because that is a cornerstone of tax planning now, and we're seeing that it could just be taken away in a snap. So there's the dividend sprinkling, and then the loss of the capital gains exemption on the share sale. And that dividend sprinkling can extend to kids and relatives and stuff like that, which is what finance doesn't like, and why they think they should change that. And then the last one is about how passive income is taxed inside corporations. I think most people realize that active income, your business income, is taxed at low rates inside a corporation, but income earned from investments is taxed very, very differently. It's already taxed much higher, but there's these little mechanisms that allow us to recover some of that tax each year by making dividends or by taking other steps. The government's basically proposing to get rid of almost all of those little tools and tricks, which means that in the short term, those investments are taxed much higher, and then taxed again when they get pulled out. Now, that is sort of similar, but losing those tools is one of the big changes that people are terrified of. This affects, like me personally, it affects Robin and many others. the total tax on those passive investments can get really, really high under the new changes. And they're already higher than business income, so it seems strange that they're changing that so dramatically.
So I guess one of the things that brings up is who will this affect and who will it not affect?
Yeah, this is a good one. Yeah,
that's a big question. I think a lot of people don't know if it's going to affect them or not.
For sure, and there's a lot of hysteria about that. It's like, oh, this is going to affect every small business. It's not. If you're, to be very clear, if you're not a corporation, doesn't affect you. Simple as that. So sole proprietorship businesses, simply not affected. This has nothing to do with them. So to clear that up, if you're not doing any of the things I just said, it doesn't actually affect you. So if you're not making dividends to your adult children in university or to a spouse that's not part of the business, that aspect doesn't affect you. If you don't have a spouse, for example, who's a shareholder, that doesn't affect you. If your corporation's not making any passive investments because it can't afford to, or you draw all the money out of your corporation, then it doesn't affect you. But among my client base, my particular client base, these changes will affect at least half, if not more. And I don't think that was the intent, and that's why I want to get this out to the world, because I genuinely believe the Liberals don't understand all of the consequences that are coming. I think they're trying to catch really rich people who are cheating, and I think there's much, much better ways to do that than making rules that are going to affect so many people who aren't cheating. I keep saying in all my posts that they're going to catch a lot of dolphins in the proverbial tuna net, because there's a lot of people like you and I aren't doing anything really wrong, but we're going to get caught up in it possibly, and I believe it's an unintended consequence for whatever that's worth.
So I guess here's another question that kind of just popped in my mind. What's your professional opinion about all this? Like, in general, what do you think about this and other ideas?
Well, this is the stuff that everybody has to take with a grain of salt, just because this is where it gets opinion based. So my personal take on it is, I really don't believe the government needs the extra revenue. Revenues have been exploding since 1968. They've way more than tripled. And previous governments have been able to run a balanced budget with less revenue, so it suggests to me that there's a spending problem, not a revenue problem.
Spending problem by the government.
Of course. I believe that the government's spending more money than is sustainable and responsible, but that's not up to me to decide, and that's up to the taxpayer to decide too. At the end of the day, if we want, better airports, better healthcare, maybe spending money does that. That's where it gets a little personal, but in very general terms, I believe the government can function perfectly well without all this extra revenue, without all this extra spending, and then they're trying to compensate for the spending by taxing, by creating new taxes or increasing taxes. So in general, that's one of my major objections. I also think that most of the fallout will be unintended. I believe that they are trying to get people who are cheating. And I believe they should, and every responsible taxpayer should believe that. Of course, we don't want people cheating. But as I said before, I think there's going to be a lot of unintended consequences. And I especially in the investment realm, a lot of this is very complicated. It's very, very complicated. And to make these broad changes, there's going to be all sorts of bizarre fallout from it. And there's going to be a lot of people who are really absolutely not cheating or doing anything weird that are going to get kind of caught in the net, and they don't belong there. Yeah. But that may happen. Well, it will happen. I mean, there's no question. And I've heard certain statements like made by the government that says, Morneau said that this won't affect anybody who makes less than $150,000, and it's just patently and totally untrue. And I don't think he's lying, but it demonstrates that they don't know what's going to happen. And they're hearing that on both sides. So to some extent, there's a little too much hysteria, but to a certain extent, this will affect the people it does affect. It could be very, very significant, and that's my concern. And I don't think they realize it. Right. I suppose the other issues. I mean, for example, I don't even know how accountants are going to have software to do the taxes in time, because these changes are going to be complicated on the investment side. Like I can't imagine how my software provider or others are even going to be ready in time for 2018 to change it. So it's coming way too fast. Yeah. With very, very little consultation, and mostly out of left field. That generally we know what they're planning on taking away or changing or whatever. Generally we know in advance, and this came really fast. Yeah. And we're down to already not even 3 weeks. before they're possibly putting that into law, or putting it into the budget. Pardon me. Yeah. So we've got. So I think there's a lot more questions that should be answered. I think they're making very simple changes in some ways to very complicated problems, and I think that's going to have all sorts of downhill consequences. And then another sort of thought is that there are way better ways. Like, let's pretend for a minute that the spending that we want to do has to be offset by new revenue. Let's pretend that's true, because it's their policy and they get to decide. But there's better ways to do it. Like, the most simple and obvious way is to simply reverse some of the changes that have happened over the previous years. We could, increase the small business tax rates back towards 11%. They're 10.5% now federally. We could increase those back up. They've been falling for years. If that's what they want to go after, that's a very simple, effective way to do it. They could reduce the amount you can make under the small rate, which is now $500,000, but it could be reduced. I don't suggest that we should be doing any of that at all, but if they're going to pursue the revenue, those are easy, well understood, simple ways that they could do it. Mm-hmm. Another thing that they could do, which in my mind is better, is they could raise the GST. So we could bring the GST back 6-7% or something if we feel that there's a revenue shortfall. And I have a personal feeling towards that, just because I believe that the GST incentivizes consumer spending or disincentivizes consumer spending. And these tax changes disincentivize saving, and that doesn't make any sense. Savings are not necessarily good for the economy, but they're definitely good for individuals, and I truly believe that the Canadian government is responsible for teaching individuals to act in their own financial best interests, and by reducing consumption taxes and disincentivizing saving, that's not what's happening. We're encouraging people to spend money and not save it. And even though that's good for the economy, it's not good for the people in question, who ultimately we're going to have to pay for anyway. Flip it the other way, and we incentivize saving as we're doing now, and reduce increase consumption taxes to cover revenue shortfalls. Again, debatable, but if that's what you're doing, I think it incentivizes the right financial mindset for Canadians too. Yeah. That's a fundamental macroeconomic problem I have with the policy. Right. Totally subject to opinion. But those are some off the top stuff that I don't like or do like about what's going on.
Is there anything else about this subject that you'd like to add, or pretty much cover it?
It covers most of it, but one thing I'd like to share is that it will create new, assuming it's going through and they don't appear to be backing off, there will be new changes to how we strategize taxes that we didn't do before. Yeah. And I know in our group we're already working to figure out what those are. Like, if you have a corporation now, an Alberta corporation, we generally don't recommend taking extra money from the company and buying our RSPs, but under the new circumstances, we definitely will. So I think it's very, very proactive on accountants' parts to start figuring out what to do next in case it happens, so that we're ready for the coming tax season, and we're not just going, I don't know, what should I tell people? So we need to prepare for it no matter what, but hopefully there's enough backlash that at least they bring in more measured, specific changes that target the behaviors they're allegedly trying to disincentivize, or get revenue in a more fair way. Yeah. It just seems like such a small group of people's being targeted. Yeah. And I think that's what the blowback is from that small group, and myself included. I'll be affected. I'm not here to complain about it because I'll be affected. I'm here to complain about it because it's horrible policy. Right. It wouldn't matter what government did it.
Well, Teri, I really appreciate you taking the time to come out and share this with our viewers. I know this isn't the typical real estate video that you're going to see, but
I hope not. You guys will be bored to tears.
It's a very important issue that I think is going to affect a lot of people, and to me it seemed relevant to do this, and I hope more people get the word out either through video or other means, because it's important for people to have good information. And we'll make sure that we put Teri's information on this video, so if anybody has any questions relating to their business or other businesses, you can get in touch with Teri, who will be able to offer you a lot of insight and maybe a roadmap to doing what's best for you.
Thanks, Robin. I appreciate that. Yeah. And by all means, too, there's more than just me. We have a firm of 12, so we'll be able to field at least some general questions. Interestingly, I'm on vacation starting in 2 days here, so we can still get you taken care of. I'm on vacation, and based on the changes, I'm deciding whether or not I'll come back. So probably I'll come back. I don't know if they'll keep me in Mexico or not.
You might stay in Mexico, eh?
Yeah. Awesome. Thanks again for your time too, Robert.
Well, thanks a lot for the info, Terry. Appreciate it.